I will like to pick your brains for other entrepreneurs like myself who are looking into financing their businesses through a loan.
If you are going into business, especially if you are starting, plan before, because you don't want to be starting the business and just running it and then be... A lot of the times, specifically with startups, banks actually have that template for you online. The biggest one, NAB and ANZ, they've actually got the business planning template. It gives you an idea of what you want to do. Even though you're not going to apply a loan with them, at least it gives you an idea on where to go. Are you asset backed? That's the first thing a lot of lenders ask. A lot of the times, most businesses, when they're going with a bank, they do want to see that you've got something behind you, like they say, skin in the game, so to speak. So
meet Paul. Paul is a finance broker with over 20 years of experience. He ran a business and sold it profitably. He facilitated over $200 million in loans for families, for businesses, and for different organizations. Today, Paul is here to help business owners understand the financial aspect of business and how business owners can navigate their way in acquiring a loan.
My business was offered a loan. My cafe business was offered a loan within 6 months of trading. We didn't take it up at first, but then
So would you, our audience who are sitting out there and watching, do you have any questions from today's session that we've had? Put them below, and Paul will be coming back another time to respond to your questions. Okay. Hi, Paul. Thanks for joining me here today. It's amazing having you in the studio with me. And with over 20 years of experience as a finance broker, and you've also run your own business and sold it profitably. That's your coffee business, like you told me when we discussed the last time. I will like to pick your brains for other entrepreneurs like myself who are looking into, financing their businesses through a loan. And welcome to the studio. Thanks for joining the Food Business Insider Secrets today.
Yeah. Okay. Thank you. Thanks for having me.
Thank you, Paul. Yeah. So as an experienced finance broker and an authority in your field, you facilitated over $200 million in loan for families, for businesses, and, for different organizations. What are those mistakes that you've seen business owners make over and over again, especially in the food industry?
So the main thing is planning. If you are going into business, especially if you are starting, plan before, because you don't want to be starting the business and just running it and then be like, oh, I need more money. Or I've had a client in my early years where they wanted a business loan, and what happened was they called the bank, which I was the banker then, and then they said, yeah, I need some extra stock to open my business. And I said, okay, so you haven't started, what's your employment? Are you still employed? No. So was there any evidence of income? No trading at all? Because I haven't even launched yet. So yeah, it's definitely something that you need to plan way before to actually get a loan, even before, as in drawing equity from your own property or getting a personal loan. In some cases, I've heard stories where some brokers, finance brokers, and that they wanted to start their own businesses. Instead of like saving, they just took a leap of faith, got a personal loan, 20,000 for a few months, and then started trading from there. So it really depends, but better to plan. Yeah.
Right. Okay. So when you talk about planning, what would planning look like, or what would good planning look like for a business owner who might be looking to take a loan to start their business or to scale their business?
First thing is a business plan. So a lot of the times, specifically with startups, banks actually have that template for you online. Biggest one, NAB and ANZ, they've actually got the business planning template. It gives you an idea of what you want to do. Even though you're not going to apply a loan with them, at least it gives you an idea on where to go, how much funds are you needing, what's your forecast as well in sales in the next few years, or what you're expecting. So there's all those questions that makes it a lot easier to jump into the business world. Yeah.
Right. Thank you for that, Paul. So as a finance broker, what are those things you would see when a business approaches you to say, oh, I need XYZ amount of money? What are those things you will be looking at to determine whether they are suitable for a loan or not? What would you be looking at?
Yeah. Okay. So first thing is, the first two main questions is, how long have you been trading? And another thing, and quite important, is, are you asset backed? That's the first thing a lot of lenders ask, like as in property backed, because a lot of the times most businesses, when they're going with a bank, they do want to see that you've got something behind you, like they say, skin in the game, so to speak. So that's definitely something to have. The third one will be cash flow, income. So if you are starting, or if you don't have any other options, like there are some non-bank lenders that can do the funding for you, but normally if you've already started your business, they'd want at least 12 months of trading to consider that, whether it be, topping up your home loan or transactions via your FPOS terminal or BAS or anything like that. So, or bank statements as well.
Right.
Yeah.
So when you talk about asset backed, I know sometimes when you move into Australia as a migrant, you probably don't have, those assets. You don't have a house behind you. You don't have a lot, but you have this business idea. You want to pull it off the ground, or you've even started. You're making sales, and you've had that proof of concept, but you've not traded up to a year, and you don't even have an asset like a house or a property behind you. What else what are other options?
The asset back part is more for the lower rates most of the time, or less risk for the lender. But there are other lenders that can lend you based on your trading, even if it's sometimes even 6 months. Like my business was offered a loan. My cafe business was offered a loan within 6 months of trading, solely because the trading was good enough. And then we just offered straight away. We didn't take it up at first, but then, during trading, we needed to fix up a few things and stuff like that. So we did take up a little bit of funding to do that. Yeah.
Right. If I may ask, what did you get the funding for? Was it to buy the equipment? Was it to marketing? What did you get it for?
We don't get loans for marketing ourselves. We have set expenses for marketing. So what we purchase is actually equipment. And I think one stage one of the stoves or something broke, and we needed to fully replace it. So yeah, we did need that, but it was paid off straight away. So yeah.
Right. So from your experience now as a finance broker, what would you say would be like the ideal thing to take a loan for? I know some businesses believe, oh, if I could just get enough money for marketing, my business is going to scale. What do you think is the best? Is it operation? Is it marketing? Is it equipment? What exactly do you think is most ideal for a business
for the loan?
Able to pay back its loan? Yeah.
I think mainly it's equipment. Marketing, I see, like, and this is my personal view when it comes to marketing, is you go through, especially retail or, cafes or restaurants, you go to approach the social media influencers that specialize in food, and some of them, not the real big popular ones, because you do need to pay a fee for them. If you're happy to do that, by all means, if you've got the budget. But there are some influencers that just just want free food just for their marketing, right? So you just need to have a look, and obviously you need to verify their credibility first. Do your own research with that to do that, and that's quite low budget. It's only like a few dishes or so, and they'll market it for you. The others is just paying for boosting for social media, Facebook, Instagram, TikTok. Yeah. So our budget, we used to do around about $500 to $1,000 a month, which is really like depending on the sales, but which is really not much. So
Okay.
yeah.
So would you reckon that borrowing for marketing would give you a good returns on investment, or it's just you would rather, from your personal experience, think it's assets like equipment or salaries or whatever? What's it?
Well, it depends on how depends on your cash flow, but look, if you are borrowing to pay salary, it's a bit like you'd need to really plan on what you're doing, because that's, to me, it's a red flag, as in, or probably not red, but like probably about yellow flag to say like, why are you needing to borrow money to pay staff? You'd be worried about that. It is really more for like equipment. Marketing is okay. If you really are very ambitious and you want to have a bigger reach to your audience, yes.
Okay, thank you. So talking about red flags now,
Yep.
as a finance broker, if I bring my papers before you to say, oh, I want to borrow. You've mentioned one of those red flags. What other red flags would you see in my request or in my papers that would make you feel like, this is not the right thing to borrow for?
Okay, so
This is not the right time to borrow. What are those
so
other red flags?
so questions. The questions is like, what's the purpose of the loan, right? Again, for staff, or sometimes even for stock, because like stock shouldn't really be a major factor as well. And to be honest, I think it's inventory and stock management reasons for that. It's not really, you don't really want to go through funding for that. It's just more, for my point of view, it's more bigger ticket items. And then if I'm going through bank statements, if I see, we call it payday lenders, or for example, I think it's BizLoan, Prosper, lenders like that. Sorry, Prosper and BizCap. So, but lenders like that, you'd want to be a bit alarming, because they're the ones that actually are very pricey. And I have seen some business owners drown to the point that they need to close their business and, foreclose it. So when we're going more in depth, going through the credit report, what business inquiries have you made? That's also another thing, because like if you're applying with some of these lenders that don't really, aren't really good, you'd be, if you did get the funding, again, I've seen loans that are on 40% or daily rate of about 2-3%. Like, that's quite a lot, right? So this is where I'm saying, like, you don't want to get funding for those reasons, right? You just want to get a normal loan, even if it's 20% per annum, but not daily rate or monthly, so you just want to be aware of that and make sure. Another thing to add with this is, because when it comes to loans under personal name, you're actually protected. You've got the National Consumer Protection, right?
Yeah.
Under a business name, you have full responsibility. You need to be in control of yourself. Because if you do lodge any complaints that you can't make repayments and stuff like that, you are a business owner. Like, it's a lot of responsibility goes back to you. So you just need to be aware of anything like that. So, yeah.
Right. Okay. So there's no there's no place to run if you fail as a business
Yeah.
owner, you just have to
Well,
take full responsibility.
yeah. Well, look, there are things to look at. You need to, go through lawyers and stuff like that, but you don't want to go through that messy stage anyway.
Yeah,
And you want to be profitable. So
exactly.
yeah.
Hmm. So the other day we were talking, you did say that, like there's some businesses that don't even have like any business taking loan, that it might just become like just working for nothing. That's what kind of could you share more about that? Like at what point, when should a business not even think about borrowing, or when does borrowing not make sense for a business, no matter how pressed you are for finances?
Yeah. So like I said, when you know that you're drowning yourself, and th- that's where those payday lenders, or it's almost like a shark loan, right? Um, where they they will grant you the funds, but
Mm-hmm.
it's very borderline of making the repayments, or not, or even keeping the lights on in your business, right? So yeah, there's actually a quote that says, like, sometimes the bank will lend you money when you don't need it. So it's
Mm-hmm.
kind of that theory where like, when you know that the bank will lend you money, you're in a pretty comfortable stage and you don't want to go back. But yeah, if your cash flow is really tight, you need to make sure of numbers, staff, stock, inventory, rent, amenities like other overheads, electricity, gas, water. Um, some cases, probably not retail, but in other businesses would be, um, you have to pay land tax to the landlord as well. So, or even if you own the property premises, you need to put in consideration land tax as well. All these other expenses. If you know that there's going to be some left over for you
Mm.
to service the loan reasonably comfortably, then yeah, by all means. But you don't want to be uncomfortable. That's the main thing.
Mm. So you did mention about shark loans. What are shark loans?
Oh, shark. It's traditionally, like, people say shark loans as in you're borrowing, like, from the mob, the gangsters and stuff like that, and you see that on TV and stuff. But look, there are some lenders. I see it as you're almost that level. Um,
Mm.
and there was a private lender, that actually called bikies on the client. That and it was mainly because it was a business loan. It wasn't under personal name, right? They called bikies. The clients got
Mm.
scared. Now
Wow.
this company is facing massive legal issues right now,
Mm.
or I'm not sure if it's been settled or whatnot. But yeah, it is close to that extent. So just just be aware um, of that.
So you don't fall into something I would call one chance. One chance is
Yeah,
you get into the wrong kind of loan and you're probably working and sweating all your life trying to pay
yeah,
off those loans, and you just have to pay the loan. Hmm.
yes, yeah.
Thank you very much for that. So what would just for a moment. So what would it be that causes, like, okay, no, you've actually mentioned that. So what are the financial numbers that a food business owner or a business owner must understand before taking a loan? What are those
The
numbers you should really
Yeah,
know?
yeah. So first thing is, what can you afford extra on top of what your expenses are now? And I forgot to mention, and GST tax as well. Um,
Mm,
which is funny because one thing is, like, in the past, business
mm,
owners used to use GST debt, tax debt, as a form of loan, because they used to be charged only 4% interest or indexation rate anyway. So why get a loan for a business when you just don't pay the tax, and then, well, you pay it, but as in you don't need to pay all of it, and then just keep that and just get more cash, better cash flow. And then eventually the ATO caught on. They charged double digits now. I don't remember, like, I think it's around 12% or something now. Yeah. So, but during that time, you can still claim it on against tax, right? You can claim the interest charges, right, for the ATO debt that's been accumulated. I think just last year now they can't. Now, that's where the rise of all these business loans come in, where they can pay off your tax debt. At least it's tax deductible, but yeah, it's still quite pricey. Where although you're claiming it on tax, it's you better. It's ideal not to have the tax debt at the first place, or have very minimal. At least have a payment plan. So yeah.
Yeah. So it looks like the options are kind of reducing here and there for business owners. So you're better off just doing your maths properly, looking at your numbers, making sure that you can afford this extra. So I want to imagine if, let's say, I'm a business owner and I'm looking at a loan possibility, or getting a loan at 7%, say, interest rate, for example, or let's say 10% interest rate. What ideally would you think would be a safe profit margin for me to really take that kind of loan? What should be like my barest minimum safe profit margin for me to take that kind of loan?
Well, you can't really judge on profit margin. It's like I said, it's your really your profit for the week, right? Your takings for the week or for the month. But most, hospitality is usually we calculate by a week. So, so for example, if you've got take home, like say $4,000, that's including paying yourself a wage and stuff like that, to live. Like probably like 30% on that maximum. That's so for example, $4,000, probably $1,000 or so of repayments per week. But yeah, that goes to the borderline of very, very high loan amount, or high interest rate anyway. But if you're looking at about 10%, which is actually not bad for an unsecured business loan, that should be plenty. If you work back, it's probably in the hundreds of thousands for that. But even that, like, that might be quite hard to obtain unsecured for that amount anyway.
Right. Okay, thank you very much for that, Paul. So back to your role as a finance broker. So when a business needs money, for example, what is the role you play in that? Like, what are the things you do? Do you go into the books to say, oh, this is a good time to borrow, or this is not a good time to borrow? What are those things that you do? And what are those things a business owner should not assume you will do in order not to get into trouble with the loan they are taking through you?
Yeah, so really what I'll do is, I wouldn't say timing wise, but I'll assess it based on the current situation now and the options that they could potentially have. So if I see that the cash flow is quite low or anything like that, then we'll probably say, look, you can probably just borrow X amount, a bit lower, or if you weigh it or whatnot, you might be able to borrow more, or some other options. I wouldn't really recommend timing wise, but it's more if you really need it, I would lodge the application and apply on your behalf if it looks all fine.
Okay, so what I'm hearing as a finance broker, for example, if I come in as a business owner and I say, see, I really need this money, even though you can see on paper that it doesn't really work well or it's not a good timing for me, you literally would normally have to go based on what I am requesting of you as a business owner, because of course I should have done my due diligence, even
Yeah.
though
Yeah.
yeah, you as a finance broker might see that okay, this might not be a good time and all of that. Is that what I'm
So
hearing?
so yes, that is right. I would probably say, look, it's better to, if you can, go without it at least for now, or whichever reason. But if it is really in need, yeah, to the point that it's no real option, then yeah.
Yeah.
So, but we don't want you to be in hardship later on. That's the main thing. You just really need to have budget a lot better as well. So
Okay. So what do the banks look at when you present the papers of the business for loan? What are those things the bank would look at before approving or disapproving the loan
yeah.
request?
Okay. So if we're talking about cash, like small loans for businesses here, usually they look at your bank account, your trading bank statements. Sometimes they just ask you for login details and they scrape all the data to determine how much we can lend for you against your expenses and also what's coming in. So that's the main thing that they would look at. The other stuff is more how long's the ABN, what type of business as well, because some businesses, there's low expenses as a mortgage broking, accounting firm. There's way less expenses than there are compared to hospitality, right? So a lot of lenders have a formula to track your sales percentage as well, and they can use that percentage of sales and whatnot as well. Yeah,
Right.
unless
How about
you've been trading, yeah, but
go
unless
ahead,
you've
go
been
ahead.
trading very well, like the normal have 2 years tax returns and all that stuff, and then yeah, that's a different story. They'll use that amount. But if we're talking about like only basing it on bank statements and stuff, that's what they determine.
Right. So how about those businesses that do mainly cash, but they probably don't have their cash documented as much or
Yeah.
something? Like how would such businesses get a loan?
Yeah, that's the very hard part. If it is cash, do you bank it, as well? Do you bank all your cash transactions? If it does, then yeah, it is potentially possible. Might be a little bit harder, but we can potentially look at that as well. Yeah, it really depends.
Right. So what I'm hearing is if let's say you're a business that does cash, make sure you're banking the cash. It's all documented. Otherwise,
Yes.
you will not have a proof of turnover in your business.
Yeah. Yeah,
And
because a lot of the times it will
yeah,
probably go through BAS anyway. So if you don't declare, you know, if you don't declare what you're earning, it's really, it's very hard to borrow the funds.
okay, thank you. So for businesses that are really doing well,
Hmm.
how should they prepare themselves for funding in terms of loan? So like we did mention about cash, for example, some businesses are doing really well,
Hmm.
but they're probably not documenting as much. Some businesses are probably missing some expenses somewhere, or how should they keep their books to ensure that they are prepared for loan, and what other things should they be preparing if they want to be successful at getting a loan with the financial institutions?
Yeah, so you really just need to clean up your financials or your books in order to do that. Like if you've got too many multiple accounts, or sometimes like you have business, personal expenses all in one, um, and that's where it muddles up, and they might think you spend a lot more on your business than you actually do, but it's actually personal expenses. And yeah, so ideally you want to separate them as well, and just make it look as presentable as possible, really. Usually, depending on where you go, probably 3 months worth of that. And then, yeah, that will help 3 to 6 months worth, on
3 to
average. So,
6 months.
yeah.
Okay. All right. Thank you, Paul. Thanks for taking us through this series today. We're going to be taking more questions. So for our audience who are sitting out there and watching, do you have any questions from today's session that we've had? Pop them below, and Paul will be coming back another time to respond to your questions. And we're also going to be taking another topic around business financing. If you have any topic in mind that you would like us to treat, please put them in the comment below, or you can email us at emailfm.foodmarkets.com.au, and we will be sure to respond to your questions, to the topics that you want us to treat. And Paul, for the final part of it today, if you had any advice for a food entrepreneur, a multicultural food entrepreneur who is starting or scaling their business, what would that advice be?
Really just look at your numbers to see, if you can, like, you don't even need a loan, to be honest. If you can afford it without a loan, you're doing very well. All right. But if you do need it, so be it. But just look at your numbers to make sure that's all fine. I can't stress enough all about the numbers within your budget. So yes, thank you.
All right. Thank you very much, Paul. It's been amazing having you today, and hope to see you next time.
Yeah, thank you. You too.
Thank you.